Hello, this is Andy from Trend Following Mentor. This is Sunday the 27th. This is the time for me that I get very introspective and I look at past trades to learn to better my craft, to become a better trader. And this is really what it's all about. It isn't just you put trades on and all this. You go back and you analyze everything that you've done in the past or even trades that you haven't done. And I'll tell you why I'm doing this. Basically, if I look at the chart right now, I'm not in the market. You can see my indicator. It has me out. I have it out both on the S&P and on the NASDAQ. But what's also very interesting, if I make a monthly chart here, and I don't ever want to be pessimistic. I always want to be optimistic. But what's interesting, if I put on, as you can see here, let me just put this 1 second, make it a little bit clearer. This is an MACD going back from 2010. Yes, it's delayed. But you can see it was all on a buy here. And right now it's getting pretty close to a sell. Do I know it'll be a sell? No, but it's getting pretty close. So I'm not being overly aggressive, especially that we had this bull market going back from March of 2009. This has been going on a long time, and most bull markets don't last this long. So I use this time now to go back and look, how would I have traded, what did I trade, and to learn. One of them is, let's start with the NASDAQ, because you always want to start first with the stock market and then go into the fundamentals and then in the technicals. What happened here, going back in 2009, you had a double bottom, and then we started turning up. And you can see all this bullishness. You can see it's written right here. It didn't take out the 200-day moving average, which I like to see. It took out much longer. But there was bullishness. A stock that would have come on your radar screen was Green Mountain Coffee. Why? It had triple-digit profits. This is what you look for. The biggest amount of money ever to be made is coming out of bull markets with high earnings, with something new, something cool. Well, guess what? This hit it. And here it is. And you can just do simple trend following ideas. And you went from a low here, a 5, all the way up to almost 100% move. You buy the breakout. Here it is. You have you can go look at a weekly. That'll help you a little bit. Cup, handle, you buy here. Very simple, very straightforward. You're buying. You put in your stop loss 7% below your entry. Because you know what? Anything can happen. So let's go back and let's see what happens here. You bought. Then there's a rule. If you're up more than 20% in 3 weeks, you got to keep it. Well, that's pretty much what happened here. You went from 10, and here it is. Look at this unbelievable move. This is called a high tight flag. You would have bought the breakout here again. Because really what you want to do is, when the trades do work, which is not, they don't happen all the time. A lot of trades do not work. I don't even tell you that most don't work. But the thing is, when they do work, you want to capitalize on them and you want to add to your position. Like you had another point here. You could have called it a 3-week tight. But if you moved up only more than 6%, so you had one entry here, here's another entry here. What another entry means, depending on your rules, which if you want me to help you, I can help you to determine, could be anywhere between 10 to 20% of your position size. And your position size, you should scale in. You don't buy all your whole full position right here. You buy 50% at the breakout of the trend following breakout. Then you can add when you're 30% above it. And then you might want to add a little, not 30%, 2.5%, excuse me, you add 30%. And then if you're a little bit more than that, you add the remainder. So basically, on this kind of a trade, you look back at the prior, let's say, home run trades, regardless if you were in them or not in them. This is the line of demarcation. If you take out this low, this 50-day exponential moving average, something is wrong. And you can see right here, if the chart turned red, you should have exited. But then if you're on top of your game, which you need to be. You went down here, tried to go down again, didn't go down. You bounced off this 50-day period moving average, and you know what? You take the trade again, and you put your stop in. And here it is. You could have locked in another 20, 25%, depending on your rules. This is what it all boils down to, is having rules. And you're using very simple trend lines, as you can see here in this example. This is what trading is. It's not easy. This is what we do at Trend Following Mentor. We try to help you become better traders. I have a book called The Bible of Trend Following, which you can pick up on Amazon with Wiley Books. The Bible of Compounding Money. I have one-on-one hourly consulting. If you want to do the one-on-one hourly consulting, I'll give you the free course. I make it very, very inexpensive to just get you started, to help you become a better trader. This is what it's all about. I have these videos that can help you as well. If there's anything I can help you with, please email me. The best is to email me, not call me, because I am a full-time trader. Whatever I can do to help you, I'm here to help you. Thank you very much.